Hey guys, Steve here from theturtlefollower.com with the trade school video for this week. This week we're going to take a quick look at short selling. And if you haven't ever sold a stock short, essentially what that means is you're borrowing stock and you're able to go ahead and profit from when the stock actually goes down in price. So you're basically selling it at a higher price and then you're going to buy it back at a lower price. That's the basic gist of what it is short selling. It's the exact opposite of going long, where you buy the stock first, the stock appreciates in price, and you sell it at a higher price for a profit. Short selling, stock goes down, you will profit from that. So I'll be honest, I'm not a big guy on short selling. I do it, but I'd much rather be long only or cash. Sometimes when the markets are reversing like now, I find it to be beneficial to at least be able to throw out a couple shorts just to generate some kind of capital, some kind of income instead of going directly to cash. There are positions that you can put on, whether it be with put options or shorting the stock in general, again, that you can go ahead and profit from the decline in the markets. So there are some caveats with short selling that you guys definitely have to be aware of. The first being that if you are short a stock and it goes ex dividend, you will be responsible for paying that dividend. All right. So if the stock goes ex dividend, it's just the same as you will get the dividend put into your account. The brokerage firm that you're in, they will go into your account and take out whatever the dividend would be. So if you're short 100 shares and the dividend is $3 a quarter, they're going to go in and take out $300 from your account. And this way they can go ahead and give it to the person that is long the shares. So as far as setup, now setup is essentially the same as we would look for in a long play. You want to look for, in this case, a descending trend line, a consolidation. Okay, descending trend line. Let's get rid of this one for now. Descending trend line, consolidation, moves towards the trend line. And then instead of a breakout, you want to wait for a breakdown. All right, and that would be the signal to get short. All right, so if this was a play that you were looking at, we actually took this in the strategy session. So we got short Estee Lauder at today's open, which is actually the 13th. And we are using a stop or a close above 75.10. All right, so in this case, it would be a buy stop instead of a sell stop, and the opening trade was a sell. However many shares we sold, I think it was somewhere in the neighborhood of 100 shares. So we sold them first. Our stop is a buy stop. Again, we have the alert set for a close above 75.10, and we'll see how that plays out. Now, a couple different things. This is actually where we've closed today being Monday. Now, there are a couple different things I do differently when I short sell. First is I actually take profit at targets. All right. So I would go ahead, look at the left side of the chart. So for argument's sake, I would look at here and say here. And I would potentially take some shares off at $70. And then the remainder of my shares, if I were to get so lucky and it come down to 66, I would take the remainder of the shares. So maybe you take half off at 70 and bring stop to break even, and then go ahead and take the remaining shares off at 65. Okay, so that's the first thing that's different, is we go ahead and we actually have profit targets set. Okay, because they're very different than when we go ahead and are buying a long stock, where we're making new all-time highs that we have no price points to reference against. All right, so the stock is just going to run, and it's going to continue to run until that trend breaks. Shorts, when you are short stock, especially the setups that I use, there are references for potential areas where it's good to take profits. All right, so on this stock, we could look at here $70 being first target. And if we hit that first target, then maybe what we'll do is we'll trail stop right up here to 73, 72, or maybe we'll even trail it to break even where we entered the trade. All right, so at least we get some out of it. We're not looking to make home runs with these. This is more just as a income play, just to generate a little bit of capital coming into the account, as opposed to looking for, a 30 or 40% winner. So that's the first difference. Second difference is when earnings come, I am exiting the trade before earnings. I will not hold a short position over earnings. I just don't do it. Long trade, totally different story. Short trade, I will exit, if it's the day of earnings, day before earnings, I'm out of the trade. Now, a couple reasons for that are, first of all, you have no idea what's going to happen in earnings. Second of all, this is not a long-term play. These are short-term moves, all right? Stocks will drop much quicker than they go up, all right? So if you can get a 15 or a 10% return in a few days, look at Estee Lauder was down 2.24% today, and we pretty much captured most of that. If we can get another 2.24% and another one, all of a sudden we're down at $66, which seems to be support. So, as far as holding over earnings, these are quick plays meant to be in it for, say, maybe 3 weeks, maybe 2 weeks, if that long. So as far as earnings, do not hold over earnings, and therefore the rules about earnings of not entering a position 2 weeks prior to earnings do not apply, because I will not hold over earnings. All right. So just to recap, you're looking for a descending trend line. You're looking for a consolidation moving back towards that trend line. You're looking for the 50-day moving average to be resistance, so over the current price. And then you're looking for a breakdown from that consolidation, entering long by selling your shares first, using profit targets to take your positions off. All right, you're taking at profit targets. You are taking a risk off the table, and you are not holding over earnings. So that's the quick down and dirty way to get short on some stock. You can definitely take a look at that. I highly recommend you paper trade that first. Shorting stock is definitely a little bit more of a finesse type of play than just buying shares long and trailing stops higher, right? So you got to know what you're doing, and you can kind of get backwards in a trade very quickly. So like I said, definitely paper trade them. But I hope that was a quick little guide for your first short trade. Take care, guys. See you tonight for the strategy session.